raise taxes for most Americans. And here to set the record straight, CPA and business analyst Dan Geltrude. Thank you so much for joining us again.
Thank you.
So we said we'd have you back after the actual details of the plan did come out. What did you think, first of all?
Well,
what you expected?
Yes, it's what I expected because it is a middle-class tax cut, and I think they achieved that.
Yeah.
Look, we have to be realistic. Not every single person in the middle class is going to get a tax cut, and there's been a lot of talk out there from the left saying this is going to be a tax increase for the middle class.
Let's take a look at that.
Okay,
while you're talking about that, because we were just discussing in the commercial break, I'm not sure how they're seeing that, because if you look at the new tax breaks or tax brackets themselves, you'll be paying 12% if you're married and earn between $24,000 and $90,000. If you're single, between $12,000 and $45,000. Then it goes up from there, 25%, and then from there 35%, and then the highest earners 39.6% compared to 12% at the lower end.
Right. It's absolutely not true.
Right.
The high income earners
are paying more.
Are going to pay more. They're certainly not going to pay less. And if you look at how those rates are broken down, the middle class is going to pay less, by and large, not in every single case. Every tax return is different, highly individualized. It depends where you live.
Right.
If you're in a high tax state, it's a different story.
And that's a big issue with this for a lot of people. Those of us who live in New York, New Jersey, and you were saying you actually have a business plan that would work.
Well, yeah, I was thinking about this because I was actually doing my own tax return yesterday to see how the plan was going to affect me. And we talk about the tax code picking winners and losers. Unfortunately, I'm going to be on the losing side. So I said, how do I turn this around? Here's the idea I came up with. I moved to Florida. No income tax there. That's for starters.
Right.
I form a corporation, get favorable tax treatment that way, and then I'm going to start a moving company to move people from New Jersey and New York down to Florida. Huge market for that with the mass exodus that's coming.
So where's the incentive here to A, pay your bills, don't owe any debt, and then earn more money? Where's the incentive to do any of that?
The incentive is not there for that. What we have to look at here is this is really an economic plan, primarily geared towards corporations, creating jobs. And that's why they keep talking about a tax cut. It's really not, because the cuts are not that great. It's really an economic plan. It's about creating more jobs through the corporations, because that's where the biggest tax reduction is.
So the corporate rate would go from 35% to 20%. That's the proposed thing. And then amongst some other details in here, as we said, it lowers the number of tax brackets from 7 to 4. Supposedly that's easier for people to do their taxes themselves, save money there. And then though the maximum deduction for state and local property tax will now be $10,000.
That's the killer. When you're talking about states like New York, New Jersey, California, if there was ever an incentive to move out of those states to go to Florida and Texas, now is the time, starting in 2018, because those are legitimately tax increases by losing those deductions.
Right. And this is still up for debate now. They can make some changes before it's fully approved, but you think that won't happen?
I would say this is pretty close to being in stone. Let's call it quick dry cement. I think it's going to stick. If they think they're getting Democratic support, there's no way. They'll have more Republican defectors than they're going to get in Democratic support.
Yeah, so they should have pushed from some bigger changes since they weren't going to get Democratic support to begin with.
Should have gone big and bold.
All right, thank you so much. Appreciate it. We'll have you back, of course.
Great.
Well, the time now is